What is up, everyone? So today I want to give a quick update on the oil market and kind of what it's been doing in the last couple weeks. I know it's been a while since I made my last video, so I just wanted to give a quick update on what's been going on in the oil market.
This is real. No. That's a scam.
And so last week, there's a report that came out that Saudi Arabia and Russia might increase production by 1 million barrels of oil per day.
What?
And at first glance, the market tanked on that news. Oil was down over 4%. A lot of the oil stocks and ETFs that I own were down well over 4%. They did recover a little bit throughout the day, but yeah, definitely a bad week for oil. We had actually a bad report last Wednesday as well. Before that, we had a build of, I believe, around 6 to 7 million barrels of oil, when normally around this time of year we are drawing the inventory levels down. So that was very bearish. We saw oil go down 2 to 3% over Wednesday and Thursday after that report, and then another 4% on Friday after the reports that Saudi Arabia and or not Iran, but Russia might increase production. So overall, like a pretty bad week for oil, but at first glance, all that seems pretty negative and pretty bearish for oil. But when you look further into it, and obviously we don't have like all the information, the oil market, there's so many moving parts in the oil market, and really, any market for that matter, there's so many moving parts, and it is very speculatory, but that's what investing is. You are speculating on what you think is going to happen and the direction that you think oil is going to go based on different various factors in the oil market. And at first glance, that seemed like a very bad report, that they're going to increase production. But looking further into it, there was a lot of detail left out of that. And looking further into it, it's very likely that Saudi Arabia and Russia will not increase production unless some is lost already. So as we know that Venezuela, they've been, their production has been declining so quickly the last year. Iran, with the new sanctions on that, we're still kind of unsure on how much we're going to lose out with Iran. So basically, I think with what Saudi Arabia and Russia were saying is that any production that gets lost, or any more production that gets lost from Iran and Venezuela, that's where they're going to start to step in and increase production. They're not just going to come out there and flood the market with oil. They did that back in 2014. And the Saudis are not stupid. They pretty much run the whole show for OPEC and for world oil, for that matter. With what they did back in 2014, they delayed a lot of investment in oil, so there's been no new oil fields developed. It takes a lot of money to develop these new oil fields and a lot of time, and they delayed that by 3 to 4 years. So really, we have no new oil fields coming online. Saudi Arabia, they're pretty much maxed out at production. They can increase production a little bit from here. Same with Russia, but especially with Russia, it takes time to increase production and develop new oil fields. So it's not like this can just happen overnight, just like that. Unlike shale, which is very responsive to higher oil prices. As we've seen the last year with higher oil. U.S. production just keeps growing with that. But, U.S. as well is pretty capped out too. We're already expected to end the year at 11.2, and I think we're at around 10.6 million barrels of oil per day right now. So that's already baked in that we're going to end the year at 11.2 to 11.3. And then any new declines in Venezuela and Iran, I think that's where you're going to see Saudi Arabia and Russia step in where they can, but it's not like they have that much spare capacity. So that's the interesting thing is if we see another, say war or something like that, just really anything that disrupts supply, that's where you're really going to see oil just shoot up, because we don't have that much spare capacity like we have in prior years. So that's what makes this really interesting. And that's again why I think that oil is such an attractive investment. I really don't see much downside. You never know what can happen, but just the downside risks I see are very limited. Honestly, the biggest downside that I see is that oil just maybe stays flat because maybe Saudi Arabia and Russia do increase production, and we just kind of stabilize our inventory levels. But I really don't see that happening. You know, Saudi Arabia is IPOing their Saudi Aramco, so they're coming public with their company, which has been private for decades. So that's a huge deal. You know, they don't want oil to be at like 40, 50 bucks a barrel when they IPO this thing. They want to get the, you know, best price that they can. So it's kind of speculative again, and kind of, you know, not very objective. But like I said, that's kind of a lot of what you do in investing, is you are speculating. And, you know, I think it's pretty obvious that they want $80 to $100 oil when they IPO this thing, which will be, I believe, sometime in 2019. I think they were talking like early 2019. It was going to be 2018, but obviously oil prices were not where they wanted it to be. So, you know, they're going to do everything they can to get oil back up to 80 to 100 bucks a barrel. Another thing that I want to touch on real quick was this week's EIA oil report. Reported a draw of, I think, around 4.5 to 5 million barrels of oil this week, which is about on par with average for this time of year. So definitely nice to see that it swung back the other way after last week we had a build of 8 million, which was actually due to a lot of like imports and exports. A lot of these like weekly figures can get thrown off pretty easily. If we have like an increase in imports and then like a decrease in exports, obviously that's going to throw off the build balance or inventory levels, which is what we saw last week. We saw a huge decline in exports, and we saw increase in imports. So that's why we saw such a big build. And I don't want to get too in depth into this because, you know, I could talk about this for another 15 minutes, but in short, this is due to what our refineries can produce. Basically, why we export oil and import oil at the same time, which doesn't make sense. Why don't we just consume everything that we produce? Well, basically, our refineries aren't set up to refine the oil that we produce, or at least all of it. A lot of our refineries are set up to produce heavier oil that is higher in sulfur content. A lot of that comes from Canada, the Middle East, Mexico, places like that. So, you know, there's a lot of nuances that, you know, are in this oil market. You could study this for years and still not know everything that goes on. That's just kind of how it goes. But it's very interesting to me, and I have spent, you know, a good amount of time studying this market, and that's why I'm so bullish. And I have, you know, the majority of my portfolio invested this. Another thing that I want to touch on real quick on last week's report was they came out with showing like inventory levels of like North America, Europe, Asia. And so North America and the Americas pretty much we're right at the 5-year average for inventory levels. Europe is a little bit above the 5-year average. And the interesting thing is Asia is well below the 5-year average, actually outside the bands. And this is really interesting because it kind of shows that the rest of the world is almost like in a pretty big deficit. And then artificially, like everyone pays attention to North America's or the United States oil report the most closely. So it's almost like artificially a little bit higher because the refineries that are set up around the world are not set up to refine basically what we produce. I mean, they can refine some of it, but as we produce more and more, just that additional, you know, another 500,000 to 1 million barrels a day, you know, they're having trouble refining that because they're just not set up to do that. So that's why we're seeing like almost a little bit of artificially high levels. And then in Asia, like I said, they are actually well below their 5-year average, which is very interesting. So yeah, that's it for this video, guys. I just kind of want to give an update on the oil market. Still very bullish. I do think we're going to see, you know, some consolidation here for the next at least 1 to maybe 3 months before we see, you know, the next rise in oil, and therefore the underlying oil stocks will go up. If you haven't already, go back and watch some of my prior videos where I go over some of my favorite oil stocks and ETFs. There's a lot of great info in those. But yeah, that's it for this video, guys, and thank you for watching.
Hey, you. Hey.